Hey there, good to see you. So, something big just happened. President Trump officially signed the Genius Act into law. And whether or not you've been following the world of crypto, this one's worth paying attention to. Because for the first time, the federal government is laying down actual rules on how digital money works, specifically stablecoins. That means real legal recognition, national standards, and maybe even new ways to send money faster and cheaper than ever before. And guess what? This law isn't just about crypto investors. It could eventually change how we all interact with money. If you've ever sent money to a family member, waited on a check to clear, or worried about inflation eating away your savings, there's something here that affects you. So if you've ever asked yourself, is crypto really the future? Or even, why does the government keep changing the rules? Stick around, because what I'll show you next might surprise you. And before we jump in, I'd love to hear your take. What's your biggest question or concern when it comes to crypto and digital money? Let me know in the comments, and if this kind of breakdown helps you, consider subscribing. Now, let's start with what this bill actually is. The Genius Act, short for Guiding and Establishing National Innovation for U.S. Stablecoins, is the first federal law of its kind, and it focuses mainly on one thing: stablecoins. These are digital tokens tied to regular money, like the US dollar. So the value doesn't swing all over the place like Bitcoin or Dogecoin. Instead, it stays close to $1, which makes it a lot more usable for everyday stuff, like paying bills, sending remittances, or moving money across borders. That's where this gets interesting. Under the new law, banks, credit unions, and even non-banks, so yes, companies like PayPal or newer fintech startups, can issue their own stablecoins as long as they follow federal guidelines. They'll need to keep reserves, basically holding $1 for every digital coin they issue. It's like having cash in a vault to back every digital dollar out there. Now, why does this matter? Because up until now, the rules were super unclear. One agency said crypto was like a stock. Another said it was a commodity. And the IRS? Well, they've got their own take, so it's been messy. This new law tries to clear some of that up by saying, okay, here's what a stablecoin is. Here's who can issue one. And here's how it needs to be backed, audited, and reported. But that's not all. The bill also bans something that had been causing a lot of concern: retail central bank digital currencies. In simple terms, a CBDC is like a digital version of a US dollar, but issued directly by the federal. Some people were worried that if the Fed created a digital wallet for everyone, they'd be able to see and control too much of your spending. The Genius Act puts the brakes on that, making it illegal for the Federal Reserve to create a retail CBDC. And that's a huge win for folks who are skeptical about government overreach. A few lawmakers actually held up the bill at first, worried that even stablecoins would lead to too much surveillance. But after some personal calls from Trump, those lawmakers were brought back on board once the anti-CBDC rule was added. What's kind of wild is how much Trump's position on crypto has changed. A few years ago, he wasn't a fan. He called Bitcoin a scam and said crypto was just made-up money. But during his re-election campaign, and especially now in his second term, he's gone full pro-crypto. He's even said this could be the biggest financial revolution since the internet. That's a big statement, but it shows how seriously his administration is taking it now. And part of that shift is probably political. Crypto firms like Coinbase and Circle spent a lot of time and a lot of money trying to push this bill through. And they weren't the only ones. Robinhood, Gemini, and even newer players like World Liberty Financial were all in the room when Trump signed the bill. Now, about that last company. World Liberty Financial launched a stablecoin called USD1 earlier this year. And here's where things get a little murky, because Trump's own family reportedly owns a big stake in that company. Around 60%, actually, and his picture was even on their site for a while, calling him Chief Crypto Advocate. That title quietly changed after people started asking questions. Some lawmakers, like Representative Maxine Waters, raised red flags. They said, hey, this might look like the president is setting policy that directly benefits his family's business. The White House responded by saying his assets are in a trust and that there's no conflict, but yeah, people are still asking questions. Now, that kind of concern about influence ethics and self-interest isn't new in politics, but it's especially sensitive when we're talking about money that could shape the future of our financial system. So it's not just about technology, it's also about trust. And speaking of trust, let's talk about what this means for you and me. If stablecoins become more widely used, you might start to see them show up in more places: your bank app, your paycheck, even your tax refund. Imagine getting paid instantly instead of waiting for direct deposit, or sending money to a family member overseas without losing a bunch to fees or conversion rates. But also, it's not all sunshine. The rules for protecting consumers aren't fully fleshed out yet. There's still a lot we don't know about how fraud will be handled, how privacy will be protected, or how the government will respond if a major stablecoin issuer fails. That's why the next 6 months matter so much. Regulators now have a window to figure out the details. Things like reserve audits, reporting systems, and legal liability. If they get it right, it could make stablecoins a legitimate, useful tool. If not, we could end up with more confusion or worse, another financial scandal. And also, this isn't happening in a vacuum. Other countries are racing ahead. China's already using a digital yuan. Europe is piloting its own digital euro. So, the US is late to the party. This law is a way to catch up and maybe even leap ahead. Trump said it himself. This is about making sure the dollar stays the world's top currency. And by tying digital coins directly to the dollar, we keep that influence strong. That's actually something a lot of economists agree on. Stablecoins, if done right, could boost demand for US treasuries, which keeps borrowing costs lower. And they could help preserve the dollar's role in global trade, especially as other nations try to shift away from it. But let's pause for a second. If you're thinking, okay, but will I have to use crypto now? The answer is no, not anytime soon. This bill doesn't force anyone into digital currency. It just creates the legal structure for it to exist and grow. Whether you choose to use it, invest in it, or ignore it, that's still up to you. That said, we've already seen companies gearing up for what's next. Coinbase and Circle are expanding. Robinhood's planning to integrate stablecoin wallets, and even banks are watching closely. So yeah, change is coming. Slowly maybe, but steadily. And what I'll be watching, and what I think we should all be watching, is how this plays out for everyday people. Will it really make things faster, cheaper, and easier? Or will it end up just benefiting big financial institutions and tech giants? And here's another thing. How will this new law affect the gap between people who are digitally fluent and those who aren't? Because not everyone's comfortable with crypto wallets, two-factor logins, or navigating digital assets. There's a risk of leaving folks behind if we don't make this shift accessible and safe for everyone. So then, here's the big takeaway. The Genius Act is a major shift, not just for crypto, but for how we think about money. It could make our financial system more efficient, more modern, and more competitive, but also raises big questions about power, privacy, and equity. We've reached a moment where politics, tech, and finance are all tangled up. And whether you're excited, skeptical, or just plain curious, it's worth staying informed. Because decisions made in Washington, like this one, are already starting to shape the future of how we live, work, and pay for things. And if you found this helpful, go ahead and hit that subscribe button. And if you know someone who's been wondering what the whole crypto law thing is about, feel free to share this with them. And hey, just for fun, let me know in the comments. Do you think digital money will replace cash in your lifetime? Or do you think we'll always keep some good old paper around?